Hey traders, welcome to Charts and Coffee. Happy Thursday, everybody. Hope everyone's doing well. We have a show right now that's starting on the heels. Right now, where are we kind of meeting right now in our Thursday show? On the heels of the ECB, where we're going to see a lot of volatility in terms of the messaging from the European Central Bank and Christine Lagarde. Right here, you see that 745 candle? Gang, there's a reason that I recommend traders and futures and then mapping out to equities understand the psychology globally, right? We don't just live in a 9:30 to 4 world, regardless of liquidity and volume and so forth. We live in a nearly 24-hour trading world. And at 745, you'll notice something. You might say, but Rag, I don't trade currencies. I don't really care. Oh, but we have to, right? And I hear you. If you're thinking, no, I'm not really trading the euro or I'm not trading the dollar, but take a look at 745 on the S&P. So large candle right here. This candle right there, right? That synced up with the messaging from the ECB. And why would the S&P care about what's happening in Europe? Because when you have a major central bank like the ECB, which in terms of trading view, I would look at second only to the FOMC, their monetary policy messaging is going to echo through other country, their currencies, through other country, their equity markets, because we're getting a little bit of insight into how other economies are dealing with their inflation issues. And that definitely is going to give us some insight into the messaging what we might hear, maybe the ratcheting up of the talk, the monetary policy messaging from the FOMC, and that's coming up. That's coming up next week. So we have the FOMC, our impact on the U.S. dollar is going to be felt from the 6E, and then we're going to see the impact on the U.S. dollar from next week's FOMC movement volatility. So that's what we've got going on this morning, and I just want to encourage everybody to take a look at. If you're a futures trader, you're already looking at this stuff. You're already looking at the intraday movement. And then for those of you that are wondering, okay, Rog, we saw last week where you said, hey, here's a massively volatile event in the non-farm payroll. And we watched you trade that with the volatility, the non-farm payroll with the volatility zones. Was that something with the ECB that was also in play? Well, take a look. Here is the HPMR zone right in here. There's your wick with the ECB at 745 resistance, right? Now, this one's a little trickier, and I don't think this was quite as easy a trade as the non-farm payroll was in terms of directional bias, because one of the things that you can see, let me grab my drawing tools here. One of the things that you can see is we inherited quite a bit of bullish trend, right, before the event. Nonetheless, this is, the thing to remember is if we're trading up into this zone, if nothing else, this is the way I'll view this. At least this reminded us, do not buy. We're running right into a ceiling. We're standing up right into that ceiling. And at least it reminds us, do not buy up there when we get that bullish momentum. So while it wasn't as clear a directional bias setup as that non-farm payroll that we analyzed, set up, and then traded together last Friday, it definitely, if anything else, prevented us from getting overly bullish with that move. And then this week, again, on Friday, I'm going to do the same thing I did last Friday, and we're going to have our CPI. CPI is a major economic pillar. It's a major hot zone. It's the inflation number. So if you want to know how we trade these, how we interpret these, we'll do that live right here at the Simpler Trading YouTube channel. Whether you're a member, whether you aren't a member, we'll make it available to everybody right at the channel, and you can see how I set that up just like we did last Friday. So I thought I'd give you a little bit of insight into the way in which the S&P responded to the euro. A lot of folks may think, Rod, does the S&P respond to things like that? And then, by the way, what was the way in which we would have looked at the euro itself? I would not usually recommend trading the currency of a country whose central bank is coming out. And that cross right there, 45 minutes ahead, we start to see a lot of volatility. Number one, forget the HPMRS. What I want to make sure everyone understands, please, please, please do not trade the currency of a country in the immediate aftermath of rate decisions and press conferences. Very volatile. And even with the tools that I've developed over the years that are designed to handle volatility, even I will say, don't do it. Don't do it. So kind of a warning, but then you can ask yourself, hey, okay, Ron's saying not to trade the 6E, but now you understand some of the reverberations of that ECB messaging in other markets, and look how neatly that S&P set up. So there are trades, but not in the places that people are talking about, but more so in the effect, sort of down the line of where that messaging could impact other economies, other equity markets. So I hope that helps. I hope that's something that is tactical and gives you some information as to, all right, Rod, yeah, do I really want to trade currencies on the central bank events? No. All right, but after all, gang, we're going to talk about, this show is about your questions. We're going to talk about what is on your mind, and kicking it off with Natty Gas, sure, UNG. So UNG, you can see here, is continuing to go in an uptrend in terms of buying the pullbacks into the wave. I'm not really changing anything, Tim, despite the seasonals. I'm not really changing anything about the way that I'm looking at Natty. I mean, we've had a lot of really great Natty trades. We've had some high volatility moves in natural gas as well. And the last time we looked at the Natty was the 1st of June, and I have a current, I have a setup out there waiting. I'm probably going to recalibrate that June 1 alert, and we'll try to take advantage of the movement we're seeing. And then before that, it was May 10, looking to take advantage of Natty and the movement on May 10. So we've been doing pretty well with the volatility. And then as long as this is double green, the seasonal trend is something I want to be aware of, because yes, seasonally we are winding down. May is the month where the seasonal rally in natural gas tends to unravel, but we don't trade seasonals, right? We look at the way they dovetail with the technical trends. We have the seasonal trend, we have the technical trend. The technical trend has not changed. So I'll be aware that seasonal bullishness is not something that's really going to be powering this move higher, but we have a very good, sound technical trend. So I'll stay long, I'll stay bullish, I'll trade what I see. Thanks for the question. ECB, Julian, good morning. ECB is raising 1/4 point. Can we look at the 6E? It's at green momentum. So what do I want to do with the 6E itself? Sure. What would I want to do with the 6E? Nothing. I don't want to intraday trade it, as we talked about earlier. And we are still stuck in a range, gang. I mean, it's easy to look at that intraday movement, right? It's easy to look at all of this and lose perspective. Look how this Darvis resistance, right? We have Darvis resistance and Darvis support. We're not going anywhere new, gang. We're not going anywhere new at all. And what I mean by anywhere new, look at the Darvis's contained price. Lots of blue grab candles. This continues to be a compressed market. So in a compressed market, when the trend that preceded was down, I'm looking for another leg lower. Not necessarily leg lower as in new low, not at all. If we go double red, we'll start talking about new lows. But as long as it's a neutral yellow trend, I'm looking for a breakdown. and then maybe retest the 104 handle area. So I am not day trading 6E, but we talked about where that momentum or that volatility in 6E could map out to opportunities elsewhere. And then 6E itself, focus on the daily, and I'm still going to be bearish on that one. All right, Kevin asked, with the ECB release today and CPI tomorrow, do I make any adjustments to the dollar? Only if it reaches my, so when we say adjustments, when we have a trade alert that goes out, for example, in the futures room or the options room or in the master room, when I send them out, I include the entry triggers, I include the target, and there's a set fixed approach to risk. So unless that risk is hit or unless a target is hit, Kevin, no, there's nothing else that I'm looking to do. If the risk has exceeded the paper cut allowance, out. If the price reaches our target, which would be great, then we can scale out. But other than that, no, I just hold. I just hold the plan and stay patient. Patience and delusion, though, again, squiggly little line. A lot of traders confuse denial of the validity of a trade or denial of a trend breaking or resuming with patience. We always want to remember, are we being patient? Are we being patient? Or are we simply saying, well, I just don't want to see that because it's against my position? And the way that we are able to differentiate, the way that we are able to not go into denial is know our point of validity. And I haven't reached it yet. Probably close in a number of ways, but not yet, Kevin. So thanks for the question. Tim asked, what are my thoughts on eBay? How do I find out what sector ETF it is in? So there's a number of ways you can do it. There's a number of sites that have the sector weightings. It's up to you which one you find helpful. I know that Yahoo Finance has it. I like using ETFDB to determine what the sectors, what ETFs eBay is a part of. eBay is mostly a part of FDN. I'm trying to think if there are any major sector ETFs, but actually eBay really kind of exists from a weighting perspective. It kind of exists outside the high concentration weighting. So I believe there are a number of ETFs, but FDN comes to mind. This is a Dow Jones Internet Fund, and it trades about 500,000 shares a day. So it's not super liquid, but that's about the only place that's coming to mind when it comes to eBay. But yeah, you can go and do a reverse search at ETFDB, and that'll take care of it for you. That's what I teach our mastery members to do, to understand that whole boats and tide approach. So thanks for the question, Tim. Good stuff. Do I think NG is a good buy on this pullback? So Dave, UNG, NG. What's interesting is, and we've talked about this. In fact, we had a conversation about this in the Ask Me Anything on Friday. In an ideal world, we could be as fluid talking about NG, setting up UNG, just as we would be talking about two stocks or two futures contracts. But because one of these is a futures contract and the other is an ETF, based on that futures contract, a lot of times the lingo and the understanding of both these asset classes, futures and ETF, sometimes it's lost, or it's just not something that traders are fluent in both. And that's what I seek to always inch closer to, which is giving traders the comfort and the confidence to say, wait a minute, I can understand natty gas futures as well as I can understand natural gas, and I can choose my own adventure into it. It's always a slow path forward because it is tricky to master two different markets. This would be UNG calls, and this would be natty gas futures, right? So to your point, if natty gas is pulling back into the wave, it is valid for a pullback buy. Yes, it actually is. And frankly, in an ideal world, I'm not really waiting for UNG to get to say 28.5 or 28.35, I'm looking at UNG through the lens of the touchstone market of natural gas, which would be futures over that ETF. The ETF is not going to reflect that more 24-hour global type opinion because that ETF is a 9:30 to 4 conversation and really nothing more. While natty gas, that futures contract is far more, trades far more and longer. So yes on natty, and that does wake up UNG, which I'm definitely going to be taking a look at, likely setting up today when I'm in the room. So thanks for the question. I appreciate that. Great. Good eye, Dave. Good stuff. All right. Next up. So gang, we have a lot of Euro and UNG questions. So if you don't mind, I'm not skipping over questions, but I think we've tackled those two particular symbols. So let's tackle the next question we have, which is, hey there, Phil, the green and red zones on your chart, what indicator are you using? And is it available to other traders? The red and green. So I have a lot of red and green, right? The zones. Oh, you mean the, gotcha. Okay. The intraday, sure. We call them HPMRs, hourly price movement ranges. It's an acronym for exactly what it is. Every hour, every 60 minutes, there is a volatility read, historical volatility read on the market. We look at it from a time perspective. So from 9 to 10, what's the typical volatility? From 10 to 11, what's the typical volatility? And this is really kind of a breakthrough in terms of mindset, because rather than looking at volume and price, we're looking at time and volatility to determine important price levels. And that's sort of the breakthrough of how are we deriving these zones. And it's going back and saying, hey, over the last 6 months, what is the nature of the S&P between 7 and 8 a.m.? By nature, I mean, what is the range in the number of points? What is the range of the number of points? And again, it's not a commonly used measuring stick because it's not data that is commonly available. So once I got my hands on this data, that's where the calculation was created, and it existed on a spreadsheet. Just crunch the numbers manually for many, many years, and then now we have the zones that were crunched from that process on the screen, and that's what it is. We call them HPMRs, again, hourly price movement ranges. I've been making these available to the mastery members and the futures members. My futures members have had access to the packs, to a number of symbols for years. That's how long this indicator has been around. But now we've finally gotten to a point where we can, and big shout out to the Lorna bot for those of you that know her. We have now automated it to the point where I used to do this manually. This was a lot of manual work that I would sit and do, every couple Sundays. So now we've automated it, and now we've expanded it so we can pull it up on different stocks, on different ETFs. I don't have it running on. There's the ETF. So we have ETF stocks, futures. So now we have these different packs to run this data. And actually, we've never made it available because we never had a pack that I really loved the idea of being able to serve both futures and, say, currency traders and metals traders and ETF traders and equity traders, and we can now. So that is actually, and Phil, I'm glad you asked, that's actually what I'm going to be talking about on Thursday. A lot of you notice these packs are multiplying. Rog, there's more of them on your chart, and I see that you're testing out some beta versions of this. We sure are. We have been now, Lorna and I, for the better part of a year. Before I ever release a new indicator, I have been using it for the better part of minimally 6 months to a year. This indicator has been around for 7 years. 7 years. It was born in the Forex markets, and we've expanded it to treasuries and indices and metals and stocks and ETFs. So, but it's really not about the indicator, gang. It's never just about the secret squiggle. It's what is the secret squiggle doing in this current environment? And how is it really a tool right? How is it really an asset in the current environment? So it's not just about the secret squiggles, but it's about being able to have sort of a switch on your chart that lets you know we're in trend mode versus chop, or we're really volatile, or markets are actually rather quiet. Those switches where okay, is this an uptrend or this is a downtrend? Do we have bullish directional bias? We have bearish directional bias. So once you understand that switch, then these levels become extremely powerful because frankly, no one else is looking at those levels because they're being calculated from things that most people don't measure. So I hope that kind of makes sense. It's something new that I think new to a lot of traders. But if you've been in the Simpler universe and if you've been in any of the rooms that I'm in for any period of time, gosh, Rog, these have been around forever and you're finally going to make them available. Yes, I am pleased with, at this point, the automation, the calculation, and the expansion of the pack. So I am stoked because this is something I've been doing since I wrote my third book back in 2012. It's been a minute. So I appreciate the question. And yes, you can tell I'm very excited to finally make these available broadly across multiple dozens and dozens of symbols. All right, gang. Gosh, just like that, we're out of time and I even ran over. Thanks as always for the questions. And if you have more questions about the HPMRs, you know what? Proofs in the pudding. Thank you to whomever let me know the etymology. I actually did not know. It makes perfect sense. I love etymology. Thank you for whoever shared that in yesterday's Charts and Coffee. Tomorrow, come join me. Last Friday, you all saw how this worked in non-farm payroll live. Who cares what it looks like after the fact? Let's do it live, right? So last Friday, we did it live with NFP, had a really great trade. Tomorrow, 8:25, we're going to be here at the Simpler Trading YouTube channel. We're going to do it live for the CPI. Put these HPMRs, just put them through the task of trying to contain and show us levels in the inflation number tomorrow. So I'm looking forward to seeing you then. All right, I'm running late. I got to get over to the futures room. Thank you as always for being a part of the Caffeinate and Dominate crew. I will see you tomorrow, 8:25. Put it on your calendar. And then if you haven't already, Thursday, June 16th. Yeah, Rog, this is kind of interesting. I want to know this switch thing. I want to know this volatility thing. Explain it to me. June 16, 8 o'clock. All right. I'll see you then. You can register at simplertrading.com/price. All right, gang. Be good to each other.